And then I think the bigger part is to help institutions get engaged in the space. In 2021 and 2022, a lot of very big institutions were doing a ton of work, going to get engaged. Some did some small investments in the space. And then, we had, Terra Luna and FTX and all these bad things happen. And with the lack of regulatory clarity, it kind of scared off a lot of institutions and they put it on ice. That's my biggest prediction, is that once we do have regulatory clarity, bigger institutions will come back to the space over the next, say, 2 years and really start investing in it in a real way.
I also think the finance sector will go all out for this as well, because they know how much efficiencies within this, whether it's in the payments or whether it's tokenizing equities and all other kind of financial assets for settlement, clearing, everything else. It feels like that is going to be, whether it's this cycle or next cycle, but that's going to be enormous when that happens.
The constant debasement of fiat currencies is a widely discussed topic among crypto enthusiasts. Central bank policies, especially those of the U.S. Federal Reserve, are often viewed with a magnifying lens to analyze and assess how such policies will impact asset prices and the broader economy. These policies have been anything but satisfying and efficient in recent years, with the many years of near-zero interest rate policy and then dizzying rate hikes that some experts believe might still negatively affect the U.S. economy. However, several prominent crypto investors believe the big picture is far bigger than these policies and their often short-term impacts. According to Raoul, the founder and CEO of Real Vision and global macro investor, the big picture is ultimately the constant debasement of fiat currencies to keep the developed world afloat, and how this debasement affects asset prices. While everything goes up in value due to this constant devaluation, nothing performs as brilliantly as Bitcoin and other cryptocurrencies. This is why Pal has been advocating for purely concentrated investments in the crypto and tech sectors. He believes nothing else is worth the hassle because nothing else outperforms the Fed's balance sheet, fiat debasement, better than these asset classes. In a recent discussion with Dan Morehead, the CEO of Pantera Capital, Pal takes a closer look at currency debasement and scarce assets value. He explains that global central banks and governments collectively increase the global money supply, effectively debasing currencies at an estimated rate of about 8% annually. This mechanism acts as an invisible tax that most people fail to recognize. As a result, the prices of scarce assets continually rise, driven by the decreasing value of the currency, or what can be termed the lowering of the denominator. This phenomenon, familiar from emerging market dynamics, explains why wages struggle to keep up, and assets like housing become increasingly unaffordable. The solution is to invest in assets that outperform this 8% hidden tax. During their discussion, Morehead and Pal also discuss how crypto is becoming even more attractive due to the changes being affected by the Donald Trump administration. They both strongly believe that in the coming months and years, institutional investment in crypto will be significantly ramped up, giving room for significant price gains. We will bring you clips from the discussion. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support, and enjoy the video.
That really is the story for fixed quantity things like Bitcoin or other cryptos, is that if the governments around the world are currently debasing at 8% a year, they're probably going to have to speed up. Why be in something is being debased, right? Why not be in something that has at least kept up with inflation, like a bunch of those things you just mentioned, like gold and S&P? Or, hey, why not get into something? Our Bitcoin fund's 11 years old. It has a 90% compound annual growth rate, right? It almost doubles every year. That's pretty good compared to -8, right? Like plus 90 versus -8. And again, investors shouldn't put 100% of their net worth into crypto, but for the majority of institutions,
You and I have been there for a while. 100% of net worth.
no, that was probably not a good idea. Probably put a little pressure on the spouse and everything. But but if you're somebody who doesn't have any exposure yet, you really should have some to essentially hedge the risk that governments do continue to debase their currencies. If you think about currency debasement, it used to be pretty straightforward, right? when I was a kid, silver-colored money was silver, right? Like dimes and quarters were made out of silver, and now they're made out of some cheap alloy, right? And even pennies, right? Pennies used to be made out of copper. It's a 5-year criminal sentence if you melt a penny in the United States, because the intrinsic value of an old school real penny is more than 1 cent, right? And so the government has to criminalize accessing intrinsic value there. And my favorite one is a pound sterling, right? Is, of course, used to be worth a pound of sterling silver. It costs 184 pieces of paper, pound sterling, to buy a pound of sterling silver. So governments are really good at debasing currencies. Unfortunately, I think they're speeding up, like all the stuff that you're talking about with deficits and paying more in interest than defense, speeding up. And so, again, that's why everyone's going to crypto. A couple 100 million people are using crypto now. 4 billion people have a smartphone, and that's all you need to operate crypto. So seems like 1 billion people will be using crypto in the next, say, 3-4 years.
Yeah, I mean, I've got my measure to get to 1 billion. I think it could be, 2 or 3 years. Probably, it's reasonably fast. The other one of the macro, before we move on from that, is when you look at the rolling debasement. Like 2017, the US were actually tightening the balance sheet, raising rates, and M2 was falling. So all liquidity was shrinking in the US at the time. They used their general accounts because of after the election and the debt ceiling. The big one in 2017 was the Chinese. And it feels like we're about to replay that exact rule book again, because the dollar's been too strong for them. They're pretty fucked. They're going through a debt deflation. They've got the aging population, slow growth. We've seen the entire rule book before, right?
Oh, yeah. No, I agree. And, China's always the unique, interesting, different thing out there. And at some point, we'll probably get around to talking about what I think is going to be an arms race to acquire Bitcoin once the U.S. has a Bitcoin strategic reserve, and China being the most interesting one because they have their entire history savings in an asset the U.S. Treasury Secretary can cancel. I mean, that's pretty wild, right? Like, they have $2 trillion in something that, if things became more adversarial, the United States could cancel. So they're going to have to take a hard look at Bitcoin as a strategic savings vehicle over U.S. Treasury notes. So that as well could put pressure on rates in the United States as foreign nations decide they need to save in something other than U.S. Treasuries.
So let's talk about that, about the Bitcoin Strategic Reserve. What format do you think it's going to be? Because we saw some noise on the tape today that it might not just be Bitcoin, it might be other U.S. Crypto assets, XRP or whatever it may be, Solana. What's your thought on all of this? Or is the US going to be openly buying crypto? Or is it going to be stuff that they've seized and ongoing seizure from criminal stuff? What do you think?
The U.S. does own 1% of all the world's Bitcoins already. We actually participated in the first U.S. Marshal Service auction in 2014 or whenever that was, which is really cool to see the U.S. Marshal Service star on the Bitcoin page, So this is just my own professional hunches, but I think what will happen is the U.S. will do a strategic reserve, but just Bitcoin. The analog would be old school gold, Fort Knox. We have an enormous amount of gold stored as a currency reserve. We don't have palladium or silver or anything else, right? So it's easy to get one very well-known thing that has 60-something% market share through. So if I were a betting man, I would say it's just a Bitcoin strategic reserve, not kind of blockchain generally. And there's actually 3 different ways the president could, or the United States could, acquire new Bitcoins. The first one is the president could decide to direct the U.S. Marshal Service to stop selling the Bitcoins that the U.S. has seized from criminals. That is about $14 billion of crypto. And for comparison, we have 650 billion of old school gold. So, it's a pretty small amount relative to other things. There is a old thing called the Exchange Stabilization Fund, which allows the president, by executive order, to stabilize currencies, and no one's tested whether Bitcoin's like a currency or not a currency in that definition, but it probably is. So the president could do some of that. And then Congress, I think, would have to pass any legislation to buy it like a significant amount, like we really wanted to do. Sometimes people talk about buying 1 million Bitcoins or whatever. That would take Congress, but there's been a huge swing in Congress too. So it's not unthinkable. Obviously prior to this election, that would have been unthinkable. But from what tallies I've seen, the majority of the people in the House, 270 or so, support crypto, and in the Senate, it's probably a lot less, maybe 20 or 25. So it's definitely something that could happen. But the point being, there's 3 different ways that Bitcoin could end up staying on or getting bought by the U.S. government. And I think at least 1 or 2 of those will happen, and maybe all 3.
President Trump recently signed an executive order aimed at establishing U.S. dominance in the digital asset market, positioning the country as a global hub for cryptocurrency innovation. However, questions remain about whether the order fulfills Trump's earlier promises, particularly the establishment of a strategic national Bitcoin stockpile. The order introduced measures to provide legal protections for crypto users and outlined plans for greater regulatory clarity, earning cautious optimism from the crypto industry. However, concerns have arisen over a perceived shift in priorities regarding the Bitcoin stockpile. Instead of committing to a definitive national Bitcoin reserve, the order discusses the exploration of a potential digital asset stockpile. Furthermore, the language used is not specific to Bitcoin and references digital assets more broadly. Adding to the ambiguity, the executive order suggests that any such stockpile might originate from existing government crypto holdings, acquired through enforcement actions, rather than active trading of cryptocurrencies as done for the Strategic Petroleum Reserve. Following the announcement, Bitcoin's price experienced a slight dip, but later recovered, trading around $105,000 late on Friday. The crypto community is now awaiting further clarification from the working group established by the executive order to address these unresolved questions. Whatever path the U.S. government decides on, Morehead is certain that other countries will also be looking into establishing strategic Bitcoin reserves. He is especially optimistic about Gulf nations, which have so far been more open to the revolutionary idea of cryptocurrencies and digital assets. Let's get back to the video.
And then that begs the question of who next. We know the Middle East is doing it, whether it's via their family offices, but maybe not directly in the sovereign wealth funds. It makes total sense for them because they want to be part of this entire thing. So what do you think? Middle East, next major player?
Yeah, I think you're spot on. I think it's very sensible that the U.S. save in something other than just gold. Gold's been great for 5,000 years, but, it's past its sell-by date. Digital gold's a great thing, so I think, the U.S. will do it. And then once the U.S. does it, you're right, there are all kinds of both strategic alliances and competitive dynamics out there. And that's the thing I think people forget is it does seem likely that places like the Gulf that want to stay aligned with the United States will replicate a strategic reserve. That seems to make sense. But equally, I think the countries that view themselves as adversarial to the United States would want to hedge, China being an obvious one, but there's a lot of countries out there, they're certainly not fully aligned with the United States, and would want to at least have some of their savings or FX reserves in a currency that's independent of, whatever the U.S. Treasury Secretary wants to do. So I think you're going to see it from both sides, the U.S. and people that want to be aligned with it, and then people that are worried about U.S. hegemony in the financial system.
Yeah, it was one of the most, I think you wrote about this as well, and I'm sure we spoke about it. One of the biggest mistakes I think the US made was the seizing of the Russian private assets and then the seizing of the reserves, essentially making them worthless. Because that sent a signal to everybody that US money is not good.
Well, it certainly sends a signal that you don't have all of your savings in something that somebody could seize. And so, I think on the margin, that's going to, encourage countries to think about saving in a stateless currency, right? Like that's what Bitcoin is. It's a separation of money and state, right? So it's a currency, does everything other currencies do, but it's not controlled by any one nation.
So if we're looking at the US regulatory side, what are you expecting to change? Because I'm starting to think, how far do we move back towards some variation of ICOs for example, because it is a great vehicle for capital formation, needs tightening up. Things like the US users can't use perps and other margin products while everybody else can. Where do you see the regulatory landscape shifting over the next year or so?
Yeah, I actually don't spend a ton of time on the regulatory side since we can't really influence it ourselves. The main theme, though, is regulatory clarity, and that's been, I think, what's lacking, is that because of the lack of clarity, some things like trading of tokens went offshore to places like the Bahamas, and we've had some negative consequences from that. So I think any clarity that the agencies in the United States could provide will be helpful. And I had served as chairman of Bitstamp for a long time, and it is difficult to manage a business when there's nothing written down. You have no idea what is a security, what's not a security. So as soon as there's more clarity on that, that will help. And then I think the bigger part is to help institutions get engaged in the space. In 2021 and 2022, a lot of very big institutions were doing a ton of work, going to get engaged. Some did some small investments in the space. And then, we had, Terra Luna and FTX and all these bad things happen. And with the lack of regulatory clarity, it kind of scared off a lot of institutions and they put it on ice. That's my biggest prediction, is that once we do have regulatory clarity, bigger institutions will come back to the space over the next, say, 2 years and really start investing in it in a real way.
I also think the finance sector will go all out for this as well, because they know how much efficiencies within this, whether it's in the payments or whether it's tokenizing equities and all other kind of financial assets for settlement, clearing, everything else. It feels like that is going to be, whether it's this cycle or next cycle, but that's going to be enormous when that happens.
No, I agree with you. And I think the ETF was huge in kind of breaking that log jam, where for years I'd be out there evangelizing for blockchain, and you talk in some firm and they would say, oh, well, we can't invest in Bitcoin for compliance reasons. I'm like, well, that's interesting. I've run a couple compliance departments and I have no idea what you mean. What do you actually mean by that? Like, why can't you do Bitcoin for compliance reasons? And then they just give the circular, well, for compliance reasons, And so now that BlackRock and all these very reputable firms have Bitcoin products out there, that just kills that. That was kind of the last, inane reason to say no. But it was a reason a lot of big entities said no. But now that you have, $35 billion flowed into branded ETFs, like BlackRock and Fidelity and Bitwise and others. So with that, I think it opens it up. And you're right. Wall Street, spends each company on Wall Street spends billions on all these silo databases, and then every day they have to reconcile them to their own databases inside, and then they got to reconcile to the outside clearinghouses and all that stuff. And I think that'll take, the better part of a decade for all that to really actually happen, but it's coming. And Mike Cagney at Figure's a very good leading example of that. He had previously been a macro trader with us back in the day, and then founded SoFi. And they're doing mortgages on the blockchain. And I actually started out as a mortgage securities trader. And it's amazing how many people take a bite out of your mortgage payment, right? Like, there's all the servicers and the people. And, it takes 55 days for the check to get from one person to the other person. So putting it on the blockchain is very efficient. And his company, Figure, already has 10 billion of mortgages on the blockchain, and everyone's talking about RWAs, that's real. Like, that's a real world asset, and there's 10 billion of it already on the blockchain. So those are the things that help big institutions get in the space. Most of the main alternative managers, like Apollo and BlackRock, they're doing funds now that are on the blockchain. I think those are a bit more proof of concept than hugely important today. But it just, opens the direction we're going.
Larry Fink, CEO of BlackRock, has frequently expressed optimism about the potential of tokenizing traditional financial assets, such as bonds and stocks. In a January 23 CNBC interview, Fink expressed hopes that the U.S. Securities and Exchange Commission would approve this shift, highlighting how digital assets could democratize investment opportunities. Experts have examined how this new sector will impact the development of existing digital asset sectors like DeFi, stablecoins, and meme coins. To begin with, many believe regulated assets like real-world tokenized assets may not align well with decentralized finance. tokenized stocks could mirror the volatility and community-driven appeal of assets like meme coins. Stocks such as GameStop or AMC, when tokenized, might become on-chain assets with speculative characteristics but benefit from the backing of regulated systems. This evolution could impact retail trading platforms, as investors might gravitate toward these hybrid financial instruments, which blend the speculative nature of crypto with the perceived stability of traditional equities. This raises questions about the broader impact on the cryptocurrency ecosystem. While tokenized traditional assets might boost adoption and credibility for blockchain technology, they could also heighten competition for existing crypto projects. The interplay between tokenized assets and cryptocurrencies could reshape the financial and crypto landscapes, affecting which sectors thrive and which face new challenges. Please share your thoughts on Raoul Pal and Dan Morehead's discussion in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.